Hi, welcome to Credit Recovery. My name is George, your certified loan underwriter and a credit counselor. Today we're going to be starting a new segment, which is do's and don'ts. These are credit tips that can go ahead and start helping you today. You heard me right, I said today, to start seeing your credit score improving and not decreasing. So in today's segment, we're going to be talking about credit cards, do's and don'ts. We're going to go ahead and be starting on the don'ts here today, and then on the next video we're gonna go ahead and be doing the do's that you should be doing for your credit. So we're gonna go ahead and just with this video stop the bad habit so you can stop seeing your credit score decrease and then start seeing it increase. If you haven't seen the previous video talking about what you should be doing for COVID-19 during your credit score, the link is going to go ahead and be down below, so you can go ahead and watch it and then start preparing yourself if you have not seen that video on what to be doing during the COVID crisis for credit. All right, the first don't on this list is going to go ahead. Don't carry a 30% or more balance on your credit cards. This can either be one credit card or multiple credit cards. You just can't exceed 30% as a whole. So if you don't know how to go ahead and find out what is 30% on your credit cards, so what you're going to do is you're going to grab the credit limit times 30% or 0.30 and then hit equal on the calculator, and it's going to go ahead and give you a figure amount. Once whatever that number ends up being, that ends up being the limit that you cannot exceed on your credit cards. So an example of this would go ahead and be, let's see, if you had one credit card and it was $1,000. If you do $1,000 times 30%, that comes out to $300. So that is where your credit limit is going to go ahead and pass, because once you start going over that, you're going to go ahead and start seeing your credit score decreasing, because that is part of the credit score algorithm that FICO score, which is part of Experian, which they rely a lot on that, and then Vantage score, which is TransUnion and Equifax. They're the ones that end up using that type of credit score algorithm. So within those two credit score algorithms, they state specifically that your credit ratio is going to play a part to what your credit score is. So making sure that you do not exceed over a 30% balance of your credit cards will go ahead and make sure that your credit score doesn't start going ahead and decreasing. If you have multiple credit cards, the same equation as follows. So let's see, if you have a total of $3,000 of total credit cards, 30% of that would go ahead and be $900. So going ahead and making sure that you don't exceed that will go ahead and guarantee that your credit score will not drop. Now, looking at this from a different perspective as a loan underwriter, I'm going to give you guys some secrets, some tips. Don't share this with nobody. You guys stay with this. So when you go to apply for a personal loan, a line of credit, signature loan, however the financial institutions name this type of loan, we will look at your credit card usage. So we'll see where your balances are and how you've been paying those balances throughout the course of the months, because we do have access to see that information when we're reviewing credit applications for personal loans or lines of credit. Because what happens is when we see that you're not paying down your balances fast enough, and because I know that can sound a little vague. So let's see if your credit limit is 1,000 and right now you are at 800 and you've had the credit card open for about a year. We start to think, because as our job as loan underwriters is to mitigate risk. It's trying to prevent as much risk as possible. So we're thinking to ourselves, you've had this credit card open for about a year, right now it's still at an $800 balance. Is there something financially happening that you just can't seem to pay down this credit card more accurately? Because what happens is, once we see a whole bunch of credit cards, and especially ones that have a lot of high balances and they're not being paid down, the chances of you either paying our loan on time starts to become less of a possibility with us. Because what's going to happen is that, because you're trying to keep up on your payments of all your other credit card balance, you may not want to pay your personal loan, or even in a worst case scenario, which would go ahead and be is you would just stop paying, and then we would just send the loan to a debt collection, which is a lot more worse than you just missing a payment past 30 days. So that's another perspective for you to go ahead and look at the credit utilization of that 30% and not exceeding it. Because if you need a loan, that is something that also ends up becoming a factor when you apply for a personal loan. So let's go ahead and move on to the next one. Next don't on this list is don't close old credit cards or lines of credit. This is meaning to your first credit card or line of credit that you've ever opened when you first started using credit. And you're asking yourself, okay, George, but if I close it, why does that affect me? How this affects you is that your credit utilization. Remember how that counts, how that plays a part of when it comes to your credit score, and how if you exceed that 30%, your credit score starts dropping. That's what starts happening when you close these old credit cards. So an example of this would be, going back to the previous example, let's say if you had the 3 credit cards, and remember it was $3,000, and then 30% of that was $900. So if you close out one of those credit cards, and now your total credit limit is $2,000, you would do the same equation. 2,000 times 30%, what ends up equaling to $600. And right now in total you're at $900 when you should be at $600. So you see where now, because you're over 30%, your credit score starts dropping. That's why it's very important for you to understand, when you close a credit card, your credit utilization starts to increase because you no longer have that credit limit on your credit reporting anymore. And also, the other reason why your credit score will continue to also decrease is because your credit experience. So what I mean by that is, going back to examples of the 3 credit cards. Let's see if the first credit card you opened, you had it open for 5 years. That's 5 years of credit history. And then let's see if you recently opened up the other 2 credit cards, 2 years. That would be a little bit between 3 to 4 years of overall credit experience that you have. By just closing out that one that you had for 5 years will decrease your credit experience from that 3 or 4 overall credit experience to now 2 years, because that's all you really have on your credit report. Is just those credit cards showing. So now now you can start seeing why it's important not to go ahead and close out those credit cards, because this can impact you in 2 ways, not just one. Another way that this will go ahead and affect you is on a loan underwriter perspective. Let's see if you had a credit card or line of credit open for a long time, and you decide that you want to increase your line of credit, and obviously, so you want to go for 1,000 to 5,000 on one of your credit cards, but in total you had 3,000. Just because you closed out the credit card that you had for 5 years, your chances of getting approved for that credit limit may not end up being approved because of this, because now they're looking at your overall experience. Once something is paid off and closed, it as part of your credit, it's not as a huge factor. So then we start looking at now your overall credit. How many years have you actually now had credit, and we would see that you only have 2, and you've only had these credit cards open for 2 years, $2,000, and now you're wanting to get or ask for more than double. So this is why it's very important when you go to apply for a line of or for a higher credit limit. Why it's important not to close out these credit cards, because you're also building not just your credit score, you're also building how much you can handle, which is one of the key things when you want to get approved for higher loans, is being able to show you're able to handle that much tolerance with that much credit. So that's another perspective you can go ahead and see as me as a loan underwriter when I've reviewed these increases for credit. So let's go ahead and move on. Still on this list is don't apply for too many credit cards in a 6-month period. When it comes to applying for any type of credit card, whether it's a credit card, an application for a home, an auto loan, a motorcycle loan, it sends a inquiry and it remains on your credit report for 2 years. This is more of a lower aspect of when it comes to your credit score, but having too much can end up impacting your credit score. You know how they say if you have too much of something, it can end up having a negative effect. That is the same thing with applying for too many credit cards or any other type of loan. It'll just start affecting you. So an example of this would be like, let's say if you're starting new into credit or rebuilding back credit because you came out of a bankruptcy, or currently you're just trying to rebuild your credit from bad credit. So let's see if you go ahead and apply for like 6 credit cards. That will go ahead and hurt your credit score more than if you would apply for just 2 credit cards. So you see how the difference between obviously from 6 to 2, how that impact your credit. That's how the credit algorithm looks at it also. So when you are starting to rebuild or starting credit, making sure that you just apply for a couple, because also when you look at it from a loan underwriter perspective, if we see that you got 6 credit cards and also they have some balances on them, we don't know how, we can't establish a credit history because it's been too soon. So by just by you just paying a month or 2 isn't going to do enough for positive credit history. We have to see a long term of credit history in order to establish how much can you really handle. So by you having these 6 credit cards, if you're approved for all 6, now when you go to apply, we're gonna see how you've maintained and paid those credit cards within the time that you decided to apply for a credit card. So let's see, within 12 months. So we're gonna see those 6 credit cards and how you've been paying them throughout the last year, and then be able to determine how much credit we're willing to go ahead and extend to you. So that's why you don't want to go ahead and apply for too many credits, because you're going to go ahead and cause those hard inquiries. Because again, if you pull your credit too much by applying for too many type of credit cards, it's going to go ahead and decrease your loan. And then also us as loan underwriters are not able to establish your credit history by you having too much credit, because we don't know if this may be possibility too much for you to handle when your credit application is being approved, because you may either be new or rebuilding your credit or coming out of a bankruptcy. So making sure that you don't apply for too many, but go ahead and make sure that your credit score continues to increase and improve. Right, there you have it, the do's and don'ts for credit card part 1. Go ahead and hit that like and subscribe button, but don't forget about the ring notification to go ahead and stay up to date on credit news and tips. Go ahead and comment below. I want to go ahead and hear about different ways that you have used your credit cards to build your credit. Remember, here at Credit Recovery, we are about having credit work for you, not the other way around. And I'm also go ahead and leave my information to go ahead and get a hold of me for any issues that you have about credit. Remember, I am a certified credit counselor and a loan underwriter, so I know what financial financial institutions look for to approve you for a loan or to just rebuild credit. We can go ahead and just as easy as just setting up a free consultation and you just going over what's going on, and I'll leave that all in the description there for you. See you guys next time.